Good afternoon. Welcome to Options Tender. It is Monday. Happy Monday, everybody. August 26, 2024. I'm going to go over a big picture point of view quickly. We're not going to spend all of our time on the monthly time frame. Just to show you some possible targets since we're getting near a major top, in my opinion. And I want to kind of give you an outlook of what it might look like from the higher time frames. So if you're new here, go down to that bottom right hand corner, hit that Options Tender logo and subscribe. We're doing this intraday at about noon 30 Eastern Standard Time. So if you are interested in getting these during trading hours, it's 99 cents to be a supporter. And I just did a video on the Qs because I set out a trade alert, and so that's for individual analysis, and I believe that's $3, something like that. So not too much to ask for. So if you're interested, feel free to support. And also, these videos come out at 4 p.m. to the public anyway, so not a huge deal. But here we are, SPY on the monthly time frame. Now, using SPY, this is all the information that we have. Clearly, we can see that 2008 correction, that formed a flat pattern. Okay, so this is very obvious to me that this is a wave 4, and then we're ending on a wave 5. So we have a 1-2-1-2 setup there, and this wave 4 in here, wave 5, 4, 5. Okay, so I think this major leg here, 15 years, is done. 16 years is done, and we need to correct. So on SPY, at minimum, getting from the bottom of 2008, 2009 correction to the top here, it would be natural to at minimum get to the 316. And more likely to the 257. That would bring us to the 200-month moving average, which we haven't tested yet on SPY, and the lows of the Corona crash. So I think that's fair. It looks devastating. It's a over 50% drop, which is natural. I believe we had 60% drops here. And much more in the Qs. I think after the tech bubble, that was a 80% drop. So it's not unheard of. That would be a good natural place. Now that's assuming that this is a correction, and after this move, that would be a nice, instead of this just being a wave 5, that would be a nice 1, because this could form into a new 1-2 setup and then go much further for a very long time. Okay, but we have to look for more information, and that would be my more bullish scenario. But let's look back at SPX. We have a lot more information going back to the 1929 crash. Very sharp move, an ABC. Devastating move. So by the rules of alternation, assuming that this all is the one wave and that we're starting to correct this structure, it's still possibly going to be a devastating move. But instead of I believe that might be a flat pattern. I know it doesn't look like it. I'm not sure that's a zigzag, but it's a sharp move. We might see more of a sideways move here. Okay, so if that is a flat, then we could easily see a zigzag. All right, and that would be sharp. But this could be more of a triangle or another flat pattern, or it could be much more complex, like the like some of the 2015 or so. All right, so I would if inflation sticks and all these fundamentals, and inflation comes back and forth, then that could be a big sideways play here, and it could get complex, and we could correct in time. instead of mostly price, okay? But let's just, without considering what it's going to look like, we can consider that this log scale, that the 62% retracement from the 29 lows into 32, I believe, 1932, into the lows, we could be looking at the 62% retracement. However it looks, that might just test the trend line. That would be a natural test of the trend line. Maybe it takes a lot more time to do it, okay? But if we want to look out a few years, then we can test the 62% retracement, or a potential channel, if it's not as bearish, would be the 50% around the 2800 area. Okay, so these kind of lead to the same direction. If it's the 62, that's just the bottom of the Corona crash again, okay? So they kind of match up, and that would be the top of the 2015, I believe, 2016 top there. And that would be a good spot where the 200's at. And then if it takes a little bit more time, 50%, that 200-day moving average, 200-month moving average could easily go along with this potential channel that I have driven from this top here to these tops drawn there. And so that would be around the 50% and the 200-month moving average. Let's say if we're into 20, I think that would make more sense time-wise if a recession lasts, typically 18 months. We could be looking into 2027 or so, if this time frame is correct on that, okay? So again, huge move to the downside. That would be a 50% retracement. So that's what we'll be looking for. Okay, let's go through the rest here. I'm going to go pretty quickly because we did a thorough look on Friday and then Saturday. So Friday, that video, we looked at the bearish scenario. We look at both scenarios, but we focused on the bearish scenario because of the Fed pivot. And on Saturday, we looked at a little bit more bullish bear trade. So meaning that we'll eke out a new high up here. So let's go. Let's move over to the monthly. This is a traditional technical analysis. Top here, trend line top here, trend line top here. We're playing around with the trend line right now. We're trading around it. Let's go over to the weekly. On the weekly time frame, see we're trading above it. We're just trading around it here, and we're testing the tops. This could either be a double top and we go lower, or the bullish scenario would be we were correct, possibly into the 534-ish area. We'll look on the lower time frames, which would be the 20-week moving average, which is super important to a lot of traders. So maybe we retest that and then make a new high, possible. And I'll show you what that would look like on the lower time frame. But as of right now, all we're doing is testing. And see, this is my primary pathway, okay? Not directly, these are not placeholders. I'm just kind of projecting that we get maybe to the lows here, a head and shoulder setup, and we go lower, and then we'll have a projected move and stuff like that later on. We need more information though. So we're getting to September 1st. We'll see where price is when that happens. That's the only time frame we have in the near term for the weekly time frame. But this 162 retracement from the 2021 correction is our final target. So we're dancing around there, retesting it. I had no clue that we'd have this massive move there to the upside. Okay, and while we're here, I know that there is the real bullish that we continue higher scenario would be that this is an A, maybe we're getting a B, and then we get a C, possibly even to the 382 as a flat correction, and then we go much higher. Okay, so that's a just a straight bull scenario with the Fed pivot that's not in my book, not my playbook. Now things strengthen and we get over that 561.48 and we hold above it. Then I can't deny the fact that it could go higher. But as of right now, it doesn't exist. Here's here's a potential channel. We have two lows here and a retracement high here. And that's in confluence with these tops here. And so projecting a bullish scenario, but still being a bearish scenario overall, would be we just get one more high. Qs will not make a new high. Okay, so this is a bearish rising wedge, broke down from it, and backtesting that wedge right now. So that's why we're getting a reaction off of it. And I think the Qs will lead. I will, if we get a new high, I will move this trend line down to this low as well, so we can see that there's another trend that we need to break down from if we're going to be bearish. So the reaction's happening off of the trend line. All we're doing is dancing around it, trying to push, can't get above the trend line, and now we're looking to retrace. And I think that could be a pretty sharp retracement. At minimum, we get a bounce off of there and then lower, or we look to go get new highs. So we have this downtrend line. There's only two touches there, so not impressive, but nevertheless, we have a trend line. And so I have the projection here for the 100-day moving average. That will be over in this range. The downtrend line, a nice support area. And also, when we look on the next page, we'll see other zones there for this to bounce off of. At minimum, get a bounce. Maximum, get a new high. But I think that will be a good spot to become neutral. So looking on here with time and price, we're in this time and price zone here. We have 825 and 827 as a zone. I know that was Sunday, so we could creep up just a little bit more. And we're looking for a reversal into 827 now. And then we have some time references coming up here. And I like the 9.3 to 9.5 or 6 zone. That will be our next zone here to see where price ends up. Now, if price is here at the 50% or 62 or even the 786, we'll see where price is at when this time frame comes in here. And then we'll be looking for, again, a bounce. This could be a impulse wave down. A bounce and lower would be my primary. And that says the top is in. We got a double top. Or we make a new high. And that target would be, if price wants to continue higher, our targets will be about 580. And then even higher if things are getting aggressive, and we have 600 at the 162. So those are two major spots there. I doubt it'll make it up to the 162. If we are bullish on this, the 127 would be a more appropriate area. The same playbook as 2021 correction that we talked about in past videos. And we would also make another weekly and daily negative divergence if this happens. And so I just don't see that going up to 600, but we'll have to keep that in mind at all times. Okay. So a lot of people might say, oh, well, gee, you're giving bulls and bears scenarios. Well, look, bull or bear, we're trading this. Bull or bear, I think we're coming down this way. Okay. And then, we'll play a bounce. But then after that, I'll have to get neutral around the 50 to 60% retracement. If they get on top of those, then you have something to work with to the upside. And you can use those as stops. Okay, so we'll talk about that in depth when and if we get to that point. And if we start breaking down, remember we keep talking about this 23% retracement. Okay, that is allowing this to be a wave 4 looking for a wave 5, right? So this will be a major zone here. 520, we get under there, and we can become much more bearish. Now, we do have the 200-day moving average that we have not tested yet. Will that test? I don't know. We'll have to see where the Qs are and everything else is in play and time-wise if we get down there. But, you know, making a double bottom around the 200-day moving average, sure. You know, you can't really specifically say, unless this low is broken, that we're in any sort of bearish trend, all right, by technicality. But I think 520 is an early signal that we're going to be very bearish, and that would bring us down to the 492, the 38.2% retracement, which even there, we'll talk about it later, if and when we get there, that's still potentially a wave 4. That's a natural spot, the 382 for a wave 4, and this would just look like an A, B, C flat pattern. And so that's where a lot of bulls would step in. And by the way, this would be a sharp move, because if this is a wave C or even an impulse wave down, this is going to be a 5-wave move. Even if you're a bear, even if you're a bull looking for much higher moves, you have a 3-wave move in ABC for possible larger A B, this is a 3-wave move for a B, and then a sharp C wave down here. So look for a reaction at 382. No matter if you're a bull or bear, you'll be looking for a reaction here, because you'll find buyers. All right, but as of this point, I think we'll be looking for a bounce around the 530 zone. That's the 62% retracement, and that would, you know, just bring us to this target zone right here. It's about a 4-point zone here, and then our target is would be in all of this confluence. All those trend lines come to a point right here at time and price at 580 if we're going to make a new high. So maybe going into FOMC, and FOMC we make the rate cut, and all of a sudden I gave the scenario on Saturday. So look at that video. IWM would be super strong and probably rip with the market, and I gave you even some individual names that I'd be looking at to for us to hedge on the upside, first of all, and even if we're short, we'll be looking for those trades. Even if we're short the indices, we'll be looking long on those individual names that I put out on Saturday. So let's go down to the 65, and we'll go to the Qs and just end it there. Okay, so this is just a closer look at that target zone that we're looking for, and it just happens to be the trend line and time and price. We have the 9.3 price zone, so just around that area. And then we'll be looking for a bounce and see what happens into FOMC. So FOMC is mapped out. If we do get a bullish scenario where we're just correcting here, and then we'll be looking into FOMC, maybe that's just the last drive to the upside into FOMC. So this is the bullish scenario. Now it could be the other way around. Maybe we start breaking these levels. My primary scenario, maybe we're head down and into an impulse wave into the 382. So we'll have to see where price is to trade off it. Right now we're in a trade. Okay, we don't stay in trades all over the place necessarily without hedging. If we stay into a trade, we'll be hedging very, very hard right here, you know. So we'll be neutral altogether in the accounts. So again, if price is down here for that possible ABC, maybe we get a nice large bounce from the FOMC rate cut. Or the exact opposite, if price is up here around the FOMC, we still have time and price, and we'll be looking for a reversal to the downside after the FOMC rate cut at this point. So let's see where price is. But we are in a trade to the downside right now. No hedges to the upside. We're looking for that reversal off of the wedge backtest. All right. QQQ. Now the Q should give us a clue on what's happening, it's leading us to the downside. It should give us a clue. Yes, this could be an ABC, and maybe we get a move to the upside, but it doesn't really look like it. You need an impulse wave to the downside. So I don't know if this impulse and then a B triangle and then 5-wave move down, whatever the case is, it does look like it has room. If this is just a correction from this and to move up here, but either way, we'll short it again. And so if we move down from here into this zone here, perhaps this leads us lower into these lows here. And SPY is relatively stronger because IWM with rate cuts is stronger, the potential rate cuts, and with TNX, the treasury rates are going down, so small caps love that. All right, so we'll see where Qs are. If it's into this zone and they're both into that green zone, we know that we're looking for a bounce. That would be too much of a coincidence. And then we'll go from there. So on the VIX, so the VIX here, we're looking at a breakout from the wedge, and now I do believe we're looking for a higher low at this point to go a little bit higher, and then after that maybe, you know, we get into our lows with another spike up here, and we start making higher highs and higher lows, and before we ramp a lot higher again. So that's what we're looking for. We're looking for a trend to start and to hold that trend for quite some time. I'm not sure that we make new lows, that we even get under 14, but we'll see on the next move to the upside if we get new all-time highs after our correction that we have right now. The VIX should go higher, and then if we go for all-time highs again, maybe then we get one more push lower and we can make a larger wedge out of this. Okay, maybe we close that gap here. In an extreme case, even go for that extreme complacency for one more move down if we make all-time highs in SPY. But Qs, we're not looking for an all-time high at all. We'd be looking for, again, Saturday is much more thorough, but this would be I'll even show you on the daily. This would be the bullish scenario where we just get a nice sharp move down here, and that would be a flat pattern, A, B, C. This could be an A, B, C and done here, but we have some unfinished business at the 786. So it's an A, B into this zone here, and then a C correction there. So that is in play. Or if we start breaking lows, you know, we have something else going on. So, all right, thanks for joining us here at Options Center. Have a wonderful day.